Imagine waking up one day and finding out that Apple is slowly moving away from the country that built the iPhone. Sounds impossible, right? For more than 2 decades, China was Apple's manufacturing powerhouse. Millions of iPhones, iPads, and MacBooks were built there. But now, Apple is investing billions outside of China. Factories are opening in India and Vietnam. So what changed? Is China becoming too expensive? Is politics getting in the way? Or is Apple preparing for something much bigger? Today, we're breaking down the real reasons Apple is moving manufacturing out of China and what this could mean for Apple, investors, and the global economy. Back in the early 2000s, Apple wasn't just looking for a country to build iPhones. It was looking for the perfect manufacturing machine. And China was exactly that. China offered something almost no other country could match. Millions of skilled factory workers, massive industrial cities, fast transportation, and suppliers located just a few miles from each other. Imagine building a smartphone with more than 1,000 different parts. The screen comes from one supplier. The battery comes from another. The camera module comes from somewhere else. The processor, speakers, screws, cables, and packaging all come from different companies. In China, many of these suppliers were located close together. That meant Apple could build millions of iPhones faster and cheaper than almost anywhere else in the world. Then there was Foxconn. Foxconn became Apple's biggest manufacturing partner. Its factories were so large that some people called them iPhone cities. Hundreds of thousands of workers could live and work in the same factory complex. If Apple suddenly needed 1 million more iPhones, Foxconn could often increase production within days. Very few countries could do that. China also invested heavily in roads, ports, airports, and high-speed logistics. That made shipping products to the rest of the world much faster. For Apple, this wasn't just about saving money. It was about building one of the most efficient supply chains ever created. And it worked. As iPhone sales exploded around the world, China became the heart of Apple's manufacturing empire. For years, this partnership looked almost impossible to break. But over time, the world started to change. Costs began to rise. Politics became more complicated, and unexpected events exposed a dangerous weakness in Apple's strategy. That weakness would eventually force Apple to rethink everything. For years, Apple's strategy seemed perfect. China handled most of the manufacturing, and the system worked like clockwork. But then, everything changed. In 2020, the COVID-19 pandemic brought the global economy to a standstill. Factories across China were forced to shut down. Workers couldn't return to their jobs. Entire cities went into lockdown. For Apple, this created a massive problem. Millions of customers were waiting for new iPhones, but factories couldn't produce enough devices. Delivery times became longer. Store shelves became emptier. And Apple realized something important. Depending too much on one country was a huge risk. But COVID wasn't the only issue. Another challenge had already been growing for years. Labor costs in China were rising. When Apple first started manufacturing there, wages were relatively low. As China's economy became stronger, worker salaries increased. That's great for workers, but it also means higher production costs for companies. Then came politics. The relationship between the United States and China became more tense. Trade disputes led to billions of dollars in tariffs. Technology restrictions became stricter. Companies started worrying that future political decisions could disrupt their business overnight. Apple didn't want its entire supply chain to depend on one country. Imagine owning only one bridge to your city. If that bridge closes, everything stops. That's exactly how Apple started viewing its supply chain. Instead of relying on one bridge, Apple wanted several. This strategy is called supply chain diversification. It doesn't mean Apple is completely leaving China. It means Apple wants manufacturing spread across multiple countries. If one country faces problems, production can continue somewhere else. For a company that sells hundreds of millions of devices every year, that's a smart way to reduce risk. And that's exactly what Apple started doing. It began investing billions of dollars outside China. New factories started appearing in countries like India and Vietnam. Those countries weren't replacing China overnight. Instead, they were becoming important pieces of Apple's future manufacturing strategy. The question now is, why did Apple choose India and Vietnam? And can they really replace the world's biggest manufacturing powerhouse? So, if Apple wants to reduce its dependence on China, Why did it choose India and Vietnam? The answer isn't just about lower costs, it's about the future. Let's start with India. India has one of the world's largest workforces. Every year, millions of young people enter the job market. That gives companies like Apple access to a huge pool of workers. But that's only one reason. India is also one of the fastest growing smartphone markets in the world. Instead of only selling iPhones there, Apple can now manufacture them there too. That means lower import taxes, faster deliveries, and better prices for local customers. The Indian government has also introduced programs that encourage global companies to manufacture inside the country. These incentives make it more attractive for companies to invest in new factories. Now let's talk about Vietnam. Vietnam has quietly become one of Asia's biggest manufacturing hubs. Many technology companies already build products there. Apple's suppliers now manufacture products like AirPods, iPads, Apple Watches, and MacBooks in Vietnam. The country offers competitive labor costs, improving infrastructure, and strong export connections. Instead of putting everything in one country, Apple is spreading production across multiple locations. Think of it like investing your money. Smart investors don't put all their savings into one stock. They diversify. Apple is doing exactly the same thing with its manufacturing. China is still incredibly important, but India and Vietnam are becoming powerful backup engines. This strategy makes Apple's business more flexible. If one country faces a lockdown, or political tensions increase, or shipping gets disrupted, production can continue elsewhere. For a company that sells hundreds of millions of devices every year, that flexibility is worth billions of dollars. But this shift doesn't only affect Apple, it also affects China. And it could reshape the global economy for years to come. So what happens if Apple continues moving more manufacturing out of China? So, does this mean China is losing? Not exactly. China is still the world's largest manufacturing powerhouse. It has decades of experience, world-class infrastructure, and one of the most advanced supply chains ever built. Apple still manufactures a large portion of its products in China. The company isn't abandoning China, it's reducing risk. That's a big difference. For China, however, even a small shift matters. When companies move part of their production elsewhere, it can mean fewer factory jobs, lower investment, and slower growth in certain regions. That's why China is working hard to keep global companies investing in the country. Now, let's look at the United States. For American consumers, this strategy could make Apple's supply chain more reliable. If production is spread across multiple countries, there's less chance that one crisis will delay new iPhones around the world. For investors, diversification is usually seen as a smart long-term strategy. A company that depends on only one country is more vulnerable to political tensions, natural disasters, or unexpected disruptions. By expanding into India and Vietnam, Apple is trying to build a stronger and more resilient business. Of course, this transition won't happen overnight. Building factories, training workers, and creating new supply chains takes years. China will remain one of Apple's most important manufacturing partners for a long time. But one thing is becoming clear: Apple's future won't depend on just one country anymore. Instead, it will depend on a global network of manufacturing hubs working together, and that may become one of the biggest business strategies of the next decade. Conclusion: Apple isn't leaving China because China suddenly failed. It's adapting to a world that's becoming more uncertain. For one of the world's most valuable companies, reducing risk is just as important as increasing profits. And this story teaches an important lesson, not just for billion-dollar companies, but for all of us. Whether you're building a business, investing your money, or planning your career, putting everything in one place is rarely the safest strategy. Diversification isn't just an investing rule, it's a survival strategy. Call to action. If you enjoyed this breakdown and want more simple videos about business, investing, and the global economy, make sure to subscribe. Thanks for watching, and I'll see you in the next video.
If you enjoyed this video, subscribe for more simple finance lessons.